So what was their business? Investment services. One of the large investment banks in America, what we call the bulge bracket firms, because they were dominating the industry with others like Goldman, Morgan Stanley, Merrill Lynch, etc. And they were providing financial services, investment banking, and investment management activities increasingly towards the end, but not enough to help them out of their the fixed income mess that they got into. Employing more than 26,000 people at the end in 2008, and their lovely website. As I said, founded in 1850, operating at a wholesale level, dealing with governments, corporates, financial institutions around the world, 5,000 employees in the UK. The core business was buying and selling shares and fixed income securities, trading and research, investment banking, which was the area that I was involved with, investment management, and private equity. So, sad story, as the financial crisis gathered momentum, the share price collapsed from a high of $86, and what's it trading at now? Less than 3 cents a share. So you see, we can all draw some bitter lessons from this. I was a shareholder, to my regret. Tried to sell as many shares as I could as soon as possible, but we all were blinded as to what was actually coming. Here's a little bit about the banking structure. As I said, I was a part of IBD, Investment Banking Division, which comprised strategic advisory. This is where the bankers are advising client firms, companies on mergers and acquisitions, share buybacks, other things that initiatives they would take. We talked a lot about this in corporate finance, right? As well as debt capital markets. I dealt a lot with those people as well. They're responsible for helping firms issue debt in the markets, bonds, and equity capital markets, where they're arranging IPOs and secondary equity issues for their clients. Very profitable business that can be, but very competitive. And in my capacity, I regularly reported to what we call the Commitment Committee. Yeah, this was a committee of senior experts in the bank who decided, should we be doing this business, and under what terms? And so I would report my credit findings to them. Is it a good credit risk? Because 3 fundamental questions the firm would ask itself. First of all, is it legal? And once we got over that hurdle, is it, well, you may find it odd to think this, but we would ask, is it the right thing to do? Is it ethical? I think that Lehman's credit culture, when I was there, was sound, despite the fact that what happened to the firm. And I wasn't involved on this side, where all the problems occurred, fixed income issuance of structured products and trading those. And thirdly, was it economically sound? Would it deliver profits for us? Those were 3 basic questions that the Commitment Committee discussed. And then we had another dedicated committee that we called the High Yield Committee. This was bonds basically yielding high spreads because they were very risky credits underneath. And so there was a lot of discussion that had its own dedicated committee chaired by, I call him potty mouth, human piranha, Tom Bernard. I don't know if any of you have read this book by Michael Lewis, Liar's Poker, which describes his experience at Lehman Brothers. Very entertaining book. I recommend it highly. And this guy is still around writing books like The Big Short, I think was his most recent book. I don't know if you've read that. I think it refers to Lehman as well. But in that book, Michael Lewis talks about this guy who would get up to speak to them during the training program at Solomon, that he described as a human piranha. And every other word was the F word. You know, it was F this, F that. And that's exactly how Tom would chair his committees. The air turned blue around him. But he certainly made an impact, you could say. Like Wolf of Wall Street, hasn't that set a record for most uses of the F word in a film? This stuff went on. You ran into some real wackos. I don't know how I spent 15 years there and survived, more or less intact. And then we had other committees like New Products Committee. So the decision process was often, oh, we developed this new product. Let's go out and sell it to all our clients immediately, without taking account of, well, is this really what the client needs or wants? No, we were focused on the profit and what we had to sell. And this was one of the problems that contributed not only to the demise of Lehman, but also to all the problems that we have in financial services today. Right? And then I interacted occasionally with the fixed income group. That's where Dick came from. He was a trader of fixed income products, research and trading. As I said, this was the engine of the firm. It had a decent reputation as a fixed income house. You know, bonds are not that risky compared to, say, equities. Goldman did a terrific job in equities. They were taking arguably more risk, but apparently managing it very well. And I had my counterparts there in corporate credit who would monitor the counterparty risk of the clients that we were doing business with. And then the equity side, comprising research and trading. And you know, the equity researchers and the bankers could not talk to each other. There had to be a Chinese wall in between. And yet there were times when that Chinese wall was penetrated. The banker is working on some M&A transaction for the client that the researcher is covering. We talked about some of these issues in equity research, right? And occasionally something might leak to influence the equity analyst's recommendation. So what do you want to do? Prepare the market for best economic conditions for that acquisition, and the equity report would be written with a slant that way, although it ought never to have been. We had one initiative internally called Targeting and Alignment, in which basically these two groups were encouraged to talk to each other. All the banks were doing it at the time. And this was discovered by the regulator. We all ended up paying huge fines as a result, slaps on the wrist, and then we moved on.